Hello, everybody. Good day. This is Adelola Shokoya. It's good to be back on our normal weekly videos, for the week. I know, it's been a while. The truth is, we always have a live weekly analysis. So that was why, for those that are member of my community, that's why I've been emphasizing that if you always watch my videos, you should join my community on Telegram. And I think we have one on WhatsApp too. But I think the Telegram own is quite and more has been very, very, very active. So if you have not joined, I'm going to be dropping the link to join the Telegram channel in the description below. So ensure you do so that you don't miss this weekly analysis. I just decide to do this. We always have it every weekend on Sundays. We'll be having it again tomorrow. But quick one. So having said that, let's continue. So as you can see on my chart, what we are looking at right now is the DXY. If you've been following the news, you notice that the DXY has been that's the dollar index has been taking a big hit. And why has that been happening? The Fed, as in August, they announced that they will start cutting the rate because the economy, the US economy has been doing better. So they want to start cutting the rate. Don't forget that for the past 4 years, 3 years, into 4 years, they've been increasing interest rate. I mean, this is the first time we had them cut rate on September 18. This is the first time they actually cut the rate. That's why you saw that the dollar actually has been crashing in 4 years. It's the first time in 4 years. If you look at the dollar index, you notice that it's been all the way down. And yesterday we had it sitting on the support. So and as well, if you go to the Fed watch, as you can see on my screen, even they're going to cut another rate on November 7th. So that means they've announced that they are still going to cut rate twice this year. September on the 7th of September or the 7th of November. Pardon me, I kept saying September. On the 7th, another interest rate is on the 7th of November and on the 18th of December. As you can see on the Fed watch, by 53%. That's as I agree that this number has always changed, can go up, it can reduce. That we're going to have another 25 basis point cuts in September. Also on December 18. Let's go to December 18. We have 49.7%. So that is, we have another 50% basis cut. So that means we expect the dollar to keep dipping. I mean, this is just simply fundamentals. You agree with that. It's one of the things that drive the market. And that's why I always say it's important that you know what is happening. If you are trading a particular instrument, you need to know why that instrument is either going up or coming down. Yeah, so you have to be aware. So I haven't said that, and then you can actually see the effect if you look at the EURUSD in the past couple of weeks. It's been surging. You can see on my chart. It's been on the way. It's been on the way up. Okay, although it's been struggling with some resistance around there. If you go to the weekly time frame as well, see that we're having a pullback, a strong pullback. And a lot of people, traders, investors have been selling off the dollars because of that news, because of that interest rate. Interest rate reduction by the Fed. You can see it in the this week. If you ask me, I won't be taking a buy around this area for a quick profit. I might take a sell if I see. I'll wait on Monday, see what price we do around this axis. Just take a quick sell. But so far so good. The EURUSD is bullish against the dollar because of that. Because of that interest rate reduction by the Fed. So there's a lot of sell off on the dollar. So you want to be careful. If you are selling, you want to, like I always say, you want to sell around the major resistance, especially around this area. But you be careful as well. Your stop loss probably a little bit above this area. Then if you look at the weekly time frame as well, we have a pullback, around the structural liquidity area zone. Okay. If you look at the pounds USD as well, you notice that it's been surging to the upside as well because of that news. It's been surging. It was only yesterday. We have since on Thursday, we've been battling this support, this resistance as well. So I'll be staying away from buying around this axis. But overall, the trend is bullish, as you can see. I'm on the weekly time frame. We might have a little pullback probably to this axis before we continue that upside. If all things being equal, as the dollar keeps crashing, and that's why you can see it's reflected on gold. If you go to gold, gold has been super bullish. 2 weeks ago, we had a live webinar, on the Telegram channel, and I was telling folks that they should be careful selling, trying to look for tops for gold. What you want to do as far as gold is concerned right now, you want to wait for pullbacks. Always want to wait for pullbacks and then buy. It's better to do that. You are safer that way. Trust me, you are safer that way, waiting for pullbacks to buy rather than trying to look for tops, because gold can be very, very aggressive. If you go to the weekly time frame, and you notice that this price region that gold is testing is around this price region that gold is testing right now is a new region, is a new gold has never got into 2,600. It's the first time. And there are different reasons that is driving gold as a commodity. Number one is the Federal Reserve interest rate reduction. That's number one. Number two is the war going around all over the world, the global crisis. Look at Israel, the one going on in the Middle East, also the one going on between Russia and Ukraine. So those are major reasons why investors are pouring into gold as a safe haven, all right, to save their investment. So right now, gold is bullish. I've been telling folks, you just want to look for opportunity to look for pullbacks and then buy. Look for pullbacks and buy. There's no double. There's no another way. There's no technical analysis you can right now for gold is to wait for pullbacks and buy. You wait for pullbacks and buy. Right, it's the easiest way to trade gold right now. As you can see on the chart, every pullback for the past couple of weeks, every pullback is an opportunity to buy. So that what we have been having is gold creating a higher low every time it pullbacks, every time it does a little pullback. And right now as well, we are right around this area. We are around this area to see another pullback probably before we continue to the upside. So you want to wait for pullbacks and take a buy and take a position. So let's look at Bitcoin as well. We've been talking about Bitcoin for some couple of weeks, and I've been saying that there are different reasons why Bitcoin is bullish. Will be bully this season. I think a couple of weeks ago we had a webinar that will focus on Bitcoin. I think I'll try and drop the video in the description below where I explained that this season that we are in, for the past couple of years since 2010, what we have been seeing with Bitcoin basically is that during halving year, which is the year we are in right now, we always expect Bitcoin to be bullish. And that number one of the reasons why we can see that is that we have a supply shock in Bitcoin. I'll be dropping I don't want to go over that. I'll be dropping the video in the description so that you can go over it. So what you will also notice is that Bitcoin has been pushing up. Number one, because of the Bitcoin halving that happened this year. Also, the interest rate cut reduction by the Federal Reserve, is making investors to take on assets that are very volatile like Bitcoins. That means there will be more money in circulation. And trust me, by next year, probably by around January, after the election in November, we should be, no matter whoever win the election, whether it's the Democratic Party or the Republican Party, whether it's Trump, whether it's Kamala Harris, whoever wins that election, by January, we should be seeing a lot of money printing happening in the US. So that means there will be a lot of money in circulation. That means people will be able to buy Bitcoin, people will be able to buy gold, people will be able to invest in the stock market. All right. So that's why we see that price is pushing up right now. So for Bitcoin as well, I'll be looking for, although Bitcoin is still within the range, but going forward, I expect Bitcoin to break out around from this price area based on what I just mentioned, all those reasons fundamentally. So and then you see that we've been printing so far so good. All we have been printing is a higher low, since the announcement of interest rates reduction as well. So lastly, I want us to look at Something happened yesterday. We saw, there's a lot of people that got caught in this. I also got caught because I've been last week. We spoke about in the Telegram, in the live this thing that we had, live webinar that we have for the weekly market analysis in the group. We spoke about the US dollar in US dollar against the Japanese yen. As you can see, I see have the and I told folks, a lot of folks in the Telegram group, that we are going up for the Japanese yen against the US dollar. So I took a position. I've taken a position around there, since almost 2-3 weeks ago, and I've been right there. I've been doing a lot of buy for USDJPY from this axis, to almost this axis. So, and what saved me from this pullback yesterday was the fact that I've already taken enough profits. So what was running was just what was running was half of the loss side of the loss size position that I took. So we had this pullback that hit me out. So I really didn't make any loss. But a lot of people actually, they ended up losing money because they didn't come out of the market, time. And the question is, why did we have this sudden pullback by the JPY index? If you go to JPY index chart, what you will notice that we all of a sudden we just saw this pullback. Look at what this candle did on the daily time frame. We just saw this massive pullback after my price has been crashing. So if you go to the 4-hour time frame, what you notice that we have this big bullish engulfing candle. So there was a news that suddenly that came out yesterday. As you can see, the Japanese yen rises as Ishiba wins LDP presidential election. So they had a presidential election. So, and that's this particular person, Ishiba, that won that election, actually brought back a lot of confidence on the yen and on Japanese yen. That's why we saw this massive pullback. So going forward, this week, what I'll be expecting is we should see a further push up for the Japanese yen. And another reason why Japanese yen is pushing really hard to the upside is the fact that they have announced so far that when they increase interest rate, they've increased their interest rate, which they have not done in a long time. They have not increased their interest rate in a long time. So we saw that the yen has actually gained a lot of strength, and that's why we saw this is really pushing forward. So far so good. You notice that in this weekly analysis today, what I've been doing is I've been talking about fundamental majorly about what is happening around the world. So because that is what is driving the currency, all the currency, even all the instruments, if you look at gold as well, they are being driven fundamentally. And that's why as a trader, as a technical analysis, as a technical person, I'm a technical person, you will also want to keep abreast of what is happening around the world. It's a combination of the two. I'm not part of those that say the fundamentals doesn't matter, or there's another group that will say technical doesn't matter. No, I love to use the two. It's very, very important to combine the two, so that once you have an idea of what is happening about the particular instrument that you're trading, you already know what to look out for technically on the chart. All right. So I'm going to be seeing you in the next video. Have a beautiful, beautiful trading week. Thank you.